Welcome to the Bankless by Design podcast, where we rethink money, ditch the system, and rediscover what it means to truly thrive well. I'm Tricia Miller, mom of 7, financial coach, and founder of Thrivewell. Around here, we believe wealth is more than numbers. It's about freedom, stewardship, and building a legacy that lasts. If you're ready to challenge the norm and take back control of your financial life, you're in the right place. Hello, and welcome back to the podcast. Today, I want to have a different kind of conversation about money. I want to ask you a simple but powerful question. What if the way that you've been taught to manage money isn't actually designed to help you flourish? For most of us, our financial lives were built on a system that we didn't even choose. Let me give you a little picture. What if you were a guppy born in a fish tank? Now, I know this sounds silly, but I remember as a kid keeping guppies in my fish tank, and it was always exciting when mama guppies would have babies, and we'd have this little side tank to put them in to keep mama safe, and so that the guppies wouldn't be eaten when they were first born. I don't know why I thought about that this morning when I was thinking about this conversation, but do y'all remember that? Anyways, the crazy analogies that pop up in my mind. I haven't thought about that in a long time. But those little fish in that fish tank, they didn't know anything else, did they? They never had the opportunity to swim in the big wide ocean in the tropics, right? So I guess in a similar way, I'm trying to explain to you that it's the same sort of thing with banking. We don't even consider the system. We're just surrounded in it. It's like the air we breathe. We grow up, we get a job, we open up a checking account at the local bank, or these days, young people might be just using Cash App. I've seen that a lot. Either way, we all wind up using a third-party bank, and we think it's normal. And we grow up thinking that putting your money in the bank, that's where it's safe and it's a necessary thing to do. And we never stop to think about it. It's just kind of automatic. It's a default. And certainly, we never think about the fact that I could be my own banker. What's that all about? It's so far out of reach. We're so busy just making ends meet. How in the world would we ever become our own banker? If you ever walked into those beautiful banks on the corner and you're like, wow, this must have taken millions and millions of dollars to start. And you wouldn't be wrong. So I think that's why we just never even consider it, right? We couldn't build our own banking system. Anyways, that's just one thing, to just a paradigm shift to actually think that we could become our own banker. But what else are we taught? We're taught that retirement plans are the only responsible path, that debt is kind of normal. Of course, we spend most of our lives trying to get out of debt just to get to zero. We have been told to save a little bit, get the best rate of return you can on that sliver of your money, spend the rest of it, hope for the best, and maybe one day, someday, you'll get to retire. So my question for you today, I guess, is how's that working for you? Seriously, what do you have to show for all your hard work? I think most of us have very little to show. Perhaps some of us are luckier than others. Perhaps some of us who are wealthier, though, are actually taking a different path. And so that's something to pay attention to. At any rate, the beginning of this podcast, I asked a question, right? What if the way you've been taught to manage money isn't actually designed to help you flourish? Have you thought about that? Well, I want to tell you that I believe that the answer is a resounding no. The financial system that we've been handed is not built for your best interest. But here's the good news. It doesn't have to stay that way. You can build something better. So before we go any further, I want to just kind of clarify. I know I mentioned this a little bit on my last podcast about what bankless by design really means. Well, it isn't about just hating banks or going off grid completely with gold bars under your mattress, although I would say it actually might be a little bit better idea than what we're doing currently, because at least gold holds some value intrinsically. But the truth is, it's not really about responding in fear of any kind. In fact, it's just recognizing that the banking function is unavoidable. So think about this for a minute. Before you run your business, before you even pay your bills or feed your family, if you don't have a business, you're participating in the process of banking. You earn an income, and that income has to go somewhere to be stored before you're able to purchase the things that you need in life, right? I don't care if you're paid cash and you stuff it in your wallet or a coffee can, and then you go out and you pay your barber for a haircut. You just participated in the process known as banking. We just never think about it that way. You had a cash flow come into your life and another cash flow going out, right? That is the process of banking, and we do it almost every day, continually, without even thinking about it. So here's the thing I want you to really grasp today, and I don't care if you heard anything else I've said, but this one you've got to understand if you're ever going to grasp the infinite banking concept. This is key. So get out a pen and paper, pull out your phone, stick it in your notes, write it on your forehead, whatever you got to do. I'm giving you the key right here to really improve your financial life. Every dollar you spend is financed. Nelson Nash said it this way: you finance everything you buy, everything. You either pay interest to someone else or you give up the interest that you could have earned otherwise. Now, let me say this one more time so you don't miss it. And I'm not trying to speak down to you at all. I just know that the first time I heard this, it was a bit of a mind bender to me, and maybe I'm slow, I don't know. But I had to think this through very carefully. You finance everything you buy. You either pay interest to someone else or you give up the interest that you could have earned yourself. That's called opportunity cost. And this is super important, especially for those who pride themselves on paying cash and don't pay interest, because we think, oh, we're doing better than everybody else because we've saved up our money and we pay cash. But guess what? Even if you pay cash, you gave up the interest that money could have earned you had you done something else with it. That is opportunity cost, and that opportunity cost is part of what is keeping you poor. So this is really important to get your mind around, that there is always a cost or a value to your capital. We see this clearly when we borrow money from someone else, right? The lender recognizes the value of their capital and they say, hey, I'm not going to give you my money without getting a reward for it. Because the lender is giving up their liquidity. They're giving up their ability to invest it in something else that might be superior, or they're giving it up to spend it on something they wanted to buy. So in exchange for them giving you their money, it really has to be worth their while. This is why when we've had super low interest rates, it was really artificially low because nobody's willing to lend their money at those low rates. This is part of the problem with our system. We're actually at a little bit more reasonable interest rates today, but I digress. So just think about it. And I think part of the reason we don't understand that is that most of us aren't actually in the position of lending. Because when suddenly somebody comes to me and wants to borrow my money, I'm like, ooh, that's going to tie up my money for a while. I've got to think about what that's worth to me. So the question becomes, why don't we value our own capital that way? So in that example, if somebody asked you for a loan, how would you treat it? What are you willing to give it up for? And I think we run into problems a little bit, especially if we lend money to our kids. We think, oh, they're my kids. I'm going to be good to them. I'm just going to let them borrow it. They can pay it back without interest. And I may be talking about grown adult kids here, okay? Something like that. But you're actually doing them a disservice because you're not teaching them to value capital. And so this is an important principle. And really, it's probably the most basic principle of the infinite banking concept, because it forces us to be honest about the value of capital. So when you use your own money, so like, for example, when you decide I'm going to use cash to purchase this, you actually should be paying yourself back as if you were a borrower and not yourself. Put on a separate hat and pay yourself back with interest. This is honest banking. You could do this with a coffee can. It doesn't matter. But this is the process of infinite banking. It is what the infinite banking concept is all about. So consider for just a moment. I'm going to give you, for example, just to kind of drive this point home. Every dime that you spend in cash is lost forever, right? How much money have you had coming into your hands that is then going right out the door, never to be seen again? So whether that's $5, $10, or $10,000, that is $10,000 that can no longer go to work for you, right? You've given that up. So let's do the math on that to demonstrate what you've actually lost, what it's actually cost you. Because you see, when we take out like a car loan or a home mortgage or whatever it might be, you actually get a statement that shows principal and interest, and you can see that cost. But when it's opportunity cost, it's a hidden cost that we don't see. So I'm going to just kind of take you through some numbers here for a second. So if you spent $10,000 and you were 40 years old, and let's just assume for easy round numbers that you're going to live to 80. So you've got another 40 years to live. Had you not touched that $10,000 and instead you had put it somewhere where it could grow a modest 4%, perhaps you put it in an online savings account and just didn't touch it for the next 40 years, that would have accrued $39,398.71 of interest, according to my compounding calculator. So you not only lost the $10,000 from your life forever, but you actually lost another $39,000 plus in interest that could have earned had you done something else with it besides pay cash. That money will never again be in your personal economy. So much for paying cash. Now, back to kind of what we were talking about a little bit earlier. You cannot escape your need for banking, right? You have to finance things in life. That is an important, it's just part of life. But you can choose who controls that banking function in your life. So right now, most families are outsourcing that control, right? They're going to the third-party bank. They're depositing their savings in a bank account that they don't own. They're borrowing from an institution that profits off of their dependence on them, and they're trusting systems that weren't designed to benefit them and don't align with their values. So when you become your own banker, you're actually reclaiming that control. You're saying, I want the banking function back in my family where it belongs. The problem is we've never even thought about that. We've never even considered that it could be a function that we could take over and actually have inside our family for our own businesses, for our own livelihoods. So I want my dollars to serve my household, not some other institution. I want my wealth to circulate amongst the people that I love and not to disappear into a system that doesn't care if I flourish or not, because that's the hard truth, right? So before I get ahead of myself, let's just talk about this idea of what we're actually born into, this system, and what we're told. We're told to put our money in savings, to get a good job, maybe invest in your 401k. Actually, sometimes they call that savings, and it's not. That's an illusion. It's risky. Therefore, it has at least a risk associated with it. It can lose money. Therefore, it's actually not savings. It's an investment, and we need to think about that differently. We then take on what we consider manageable debt for cars, homes, and college, because these are things that we need in life. And we hope that the compound interest on the little sliver of money that we managed to put into someone else's plan is going to someday set us free. But here's what's happening when we follow this conventional advice. First of all, the Federal Reserve, which, by the way, there's nothing federal about it, but that's another story for another day, is quietly eroding your savings through inflation. And I don't care where that savings is held. Unless your dollars are compounding beyond the rate of inflation, you're losing money. Banks then, when lend out your deposits multiple times, earning profits on your money, that if you were taking over that banking function, you could be doing that while they're paying you pennies for the interest on the money that you give to them. Okay. And here's what's even worse to me than that, because I expect if a bank is going to exist and a bank is going to stay profitable, then they need to do that. If a bank is going to lend you money, they have a right to the value of their capital, just like we should, right? I completely am good with that. And that is what we want to imitate, because that's smart, that's wise, it's honest, okay? So good for them. Let's just learn from them. But here's what a lot of people don't understand. The fractional reserve system upon which our banking system works, okay? They're now allowed to print, or I guess today you would say they are allowed to digitize, to out of thin air create more money for every dollar that you deposit or borrow from them. So it used to be that they had to keep at least 10% of reserves in the bank. And my understanding is that now they don't even have that guardrail. So is it any wonder we have bank bailouts, which then are also paid by taxpayers? So we get hurt at every turn. But they don't even have that limit of 10% anymore. They can have 0% reserve and they can create money out of thin air. And by doing that, they're inflating the money supply. And if we did that, that would be considered criminal. We'd be brought up on charges for, what's it called? I don't even remember. I can't think of the word. I'm not sure why. Okay, we would just be brought up on charges for a crime. So when they create money out of thin air, they're actually devaluing all of our dollars. I mean, they already don't have any backing by gold, but the greater the supply, the less they are worth. So every time you use a third-party bank, you're actually hurting yourself and all your neighbors. You're hurting all of us. And I'm not trying to make us all feel guilty. We're born into this system. We don't know any different, right? But as Henry Ford famously said, if the people knew how the banking system really worked, there would be a revolution by morning. So I think it's important that we start waking up to what is really happening, because then we will know what to do. So, and I know the situation is a bigger problem that I certainly can fix by myself or that you can fix by yourself. It's a monster of a problem. But at least when you become your own banker, you can begin to withdraw your participation from it. So I like to consider it a quiet revolution of just withdrawing and no longer feeding the beast. We'll get into this more later, perhaps, but suffice it to say, why would we want to participate in a system that is hurting us, let alone not being aligned with our values, and let alone earning interest that we could then recapture for ourselves instead? While at the same time, we just keep working endlessly, trying to service these debts and obligations that just make the system grow stronger. So it's a treadmill that I want to see us get off. We need to get off of their treadmill, their system, and we need to take over responsibility and ownership and learn what's going on so that we will know what to do. So I have taken a few detours here that I really honestly didn't intend, but I'm going to stop here for today. If you have found this interesting or valuable in any way, please go ahead and like and subscribe to my podcast, and feel free to leave me a comment. I'd love to hear your thoughts, get your feedback. But until next time, have a great week. And thank you so much for listening. Thanks for tuning in to the Bankless by Design podcast, where we're done with the system and we're doing money differently. Be sure to subscribe, share this episode with someone who needs it, and visit us at banklessbydesign.com to learn how you can start living bankless by design.